Hello, my dear students. A very warm welcome to all of you in Sri Jain, the Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we will continue with Chapter 3, that is Bank Reconciliation Statement, BRS, and will continue the further concepts. So let's begin. This is Lecture 2 of BRS. So, in the last class, we have discussed some of the items that frequently cause a difference in balancing the cash book and passbook. The first item was check issued but not presented for payment, and the second item is check deposited with the bank but not cleared. Let us see from third point today. Interest allowed by bank. My dear students, what happens? The bank credit interest in your bank account directly, and whenever we take the bank statement or whenever we take the passbook printed, at that point of time, we'll understand and we get informed that in our account we have received the interest. That means the bank has credited the interest in our bank account. So, supposingly, what happens in cash book? The balance is 10,000. In passbook, as per our knowledge, the balance is 10,000. But the bank has given us an interest of 2000. That means what? In the passbook, as per passbook, the balance is 12,000. But as per cash book, the balance is only 10,000. When we get the passbook printed or when we demand the bank statement from the bank, at that point of time, we'll get to know that we have received this 2000 as bank interest. And this has been credited in our passbook. Let us follow this. If the bank has allowed bank interest to the customer, then the entry will normally be made in the customer's account and later on in the passbook. The consumer usually comes to know the amount of the interest by pursuing the passbook and only when he takes the relevant entry in the cash book. That means what? That there is an entry in the passbook, but because the customer is not informed about the bank interest given by the bank, and that is why in cash book the entry is not there. Over here, an example is shared. The balance as per cash book and passbook is 10,000. The bank has allowed 1,000 rupees as bank interest on savings bank account to the customer. In the cash book, because the opening balance was 10,000, the closing balance will also be 10,000 because in between opening and closing balance there is no relevant entries. I believe you understood. But as per the bank statement, in the passbook, there would be a credit entry of 1,000. Why? Because the banker has deposited 1,000 in the bank account of the customer and the banker treat customer as creditors or trade payables. So the opening balance is 10,000, but interest credited by the bank in the savings bank account, over here is 1,000. 1,000. So the closing balance is 11,000. Now the customer will come to know about this 11,000 and either he will check and accordingly he will change the cash book. He will make the adjustments in the cash book. Just see it over here that because of such entry, balance in the passbook is increased to 11,000, 10,000 plus 1,000. That is the bank interest. Whereas balance in the cash book remains 10,000 only because there is no information about the bank interest. No information about the bank interest, about the bank interest. Until this information reaches to the customer, he records such transaction. I believe you understood. So basically, if we are if we have balance as per, if with us we have balance as per cash book, balance as per cash book. Over here, the balance as per cash book is 10,000. Balance as per passbook is 11,000. So we need to add 1,000 over here and we will write what? Bank interest given. Bank interest credited. And the closing entry would be balance as per passbook. Balance as per passbook. Understood? But supposingly, if we have balance as per passbook with us, balance as per passbook, balance as per passbook, that is 11,000, and we need to reach to cash book. So we will do what? We will deduct 1,000 from here and we will write what? Bank interest credited. Bank interest credited minus 1,000, and this balance would be balance as per cash book. Balance as per cash book. Clear? Nice. Let's start from point number 4. Let's resume. So interest and expenses charged by the bank. Many a time it happens the bank will charge some interest or the bank will charge some kind of expense directly from our bank account. Supposingly that generally bank charges for SMS charges, message charges, or bank uh, overdraft charges, overdraft charges. Many a times it happens that bank charge you for NEFT or RTGS charges, National Electronic Fund Transfer charges, real time gross settlement charges. So many a times bank will charge you for this. The banker will not inform you personally. So generally we were not having any type of information regarding the bank charges that the banker has deducted from our bank account. So in the cash book we don't change the balance, but in the passbook the banker will definitely deduct it and the banker will definitely change the balance as per passbook. Just see over here, like 3 above, the interest charged by the bank and the amount of bank charges are entered in the customer book and later in the passbook. The customer makes the required entries only after he sees the passbook and he come to know about the expenses charged by the bank. These are debited to customer's account directly and therefore till the entry is passed in the cash book, the bank balance as per passbook is less than the bank balance as per cash book. So I'll quote an example over here and then we'll try to understand this. Supposingly, this is Mr. A. He has account with ICICI Bank. The bank has charged him for RTGS charges. The charges is 100 rupees. As per Mr. A, in the cash book, the balance is 10,000 rupees. But in the passbook, the balance is, in the passbook, the balance is 10,000 minus 100, 9,900. So when we'll do the reconciliation of cash book and passbook, at that point of time, this entry will be understood by the accountant of Mr. A and accordingly he will reconcile the cash book. I believe you understood. the accountant will make the adjustments in the cash book. Let's continue with point number 5. Interest or dividend collected by the bank. Many a times it happens that the banker, Mr. A, that is the customer, give directly a request or a standing order to the bank that the banker should collect the dividend from the company directly. Dividend from the company directly or interest from the company directly. Dividend on shares and interest on debentures. So we can say that securities. Shares and debentures together it is called securities. So Mr. A has given a standing order or standing request to the bank to collect dividend and interest, and Mr. A has given the bank details to the company. This is, say for example, ABC Limited. When ABC Limited declared dividend, ABC Limited deposited the dividend directly to the bank. Mr. A was not having this information. So while Mr. A was maintaining the cash book, the balance was 1 lakh as per cash book. But in the passbook, the opening balance was 1 lakh, but 10,000 is credited as dividend. So we can say that the balance is 1 lakh 10,000 in the passbook and the balance is 1 lakh in the cash book. So either we need to reconcile cash book with passbook. I believe you understood. So over here if we are making the cash book first, so if we are given balance as per cash book, if we are having this information balance as per cash book, over here the balance as per cash book is 1 lakh and we need to reach to 1 lakh 10,000. That means what we need to add this 10,000 is the in the cash book. So we will add and we will write what? Interest and dividend. Interest and dividend collected by the bank. Collected by bank directly, and this closing balance will be balance as per passbook. Balance as per passbook 1 lakh 10,000. But supposingly in the question balance as per passbook is given. Balance as per passbook is given. So what is the balance as per passbook? 1 lakh 10,000. So we need to reach balance as per cash book, that is 1 lakh. We will deduct this 10,000 and we will write minus interest and dividend collected by the bank. And we will write balance as per cash book. I believe you understood these two adjustments. Let us continue with point number 5 now. Interest or dividend collected by the bank. Just see it over here. Sometimes investments are left with bank in the safe custody and the bank itself sees to it that to collect either interest or dividend is to be collected on the due date. Entries are made as indicated in third above. Just see it over here, this example. Balance as per cash book and passbook is 15,000. So cash book balance is 15,000. The opening balance, the client or the customer is having no information about the dividend or interest. So over here the closing balance is also 15,000. But in the bank statement or in the passbook the balance is 15,000. But over here the bank has collected a dividend of 2,000 from the company directly. So this 2,000 should be added to the bank balance and the closing balance is 17,000. So accordingly we will make the adjustments or changes. Over here I had shown you. Let's continue. Just complete these 3 lines. On collection of dividend, that is bank credits, the amount of customer's account. So balance in the passbook is increased to 17,000, but whereas the balance in cash book remains only 15,000 until the information of such dividend is received by the customer or reaches to the customer, and hence records such transaction as well and tally or reconcile his cash book as per passbook. The next point, point number 6, direct payments by the bank. Many a times it happens that we give a standing instruction to the banker to make some direct payment, supposingly insurance payment, electricity payment, and so on. The bank may be given a standing instruction to make a certain types of payment for insurance premium. In this case also, the customer may come to know that the payment only on seeing the passbook, because the insurance company will directly send the bill to the banker and the bank on behalf of us make the payment for the insurance premium on time. So in that way, the consumer will not miss the deadline. The entries in the passbook and the cash book may thus be different on different dates. Let us see an example over here. The balance as per cash book and passbook is 20,000. The bank has instructions to pay insurance premium, that is 1500, directly to insurance company at the end of the month. So we the customer are preparing cash book and the banker will be preparing the passbook. So as per our balance, the balance is 10,000, the balance is 20,000. As per passbook, the balance is 20,000 minus 1500, that is 18,500, because there is a payment of insurance premium which is done directly from the bank. The customer will come to know about it whenever he checks the passbook. So if in question, if we are preparing balance as per, if we had given the information balance as per cash book, in that case the balance as per cash book is 20,000. We need to reach at 18,500, so we will deduct 1,500 from the cash book. Do what other has done. We will write minus insurance premium paid, and the closing balance will be balance as per passbook. On the same lines, if balance as per passbook is given in the question, in that case the balance as per passbook is 18,500. The balance as per passbook is not 18,500, my dear students. The balance as per passbook is 20,000. Do what other has done. Other has done in the sense, okay, so over here balance as per passbook is 18,500. As per cash book the balance is 20,000. Do what other has done. So we have to add 1,500 over here. We will write add insurance premium paid. Insurance premium paid, and this balance will be balance as per cash book. Balance as per cash book. I believe you understood this. See this cash book, the opening balance is 20,000. The customer was having no information about the payment of insurance premium. So the closing balance is also 20,000 only. But as per the passbook, the opening balance is 20,000. But there is an insurance premium paid. So withdrawal of 500. Over here, the closing balance changes to 18,500 credit. On payment of insurance premium, bank debits the customer account by 1,500. So balance as per passbook decreased to 18,500, whereas balance as per cash book remains 20,000 only. Until the information of such payment reaches to the customer, he records such transactions. Let's see point number 7. Direct payment into the bank by a customer. Many times it happens, students, that we had made sale to some person. Supposingly over here Ram had made sales to Mohan, and Mohan is the debtor because this sale is a credit sale. After 2 months, Mohan directly deposited the amount that he needs to pay to Ram in the Ram's bank account. Ram's bank account. Ram is having no information regarding this transaction, but the banker has collected the money. So what will happen? As per the cash book, the balance will not increase, but as per the passbook, the balance will increase, and accordingly, we need to make the adjustments. Mohan has deposited directly to Ram's bank account. And Ram is not having any information regarding this. But whenever Ram will tally cash book with passbook, he will do the bank reconciliation statement. At that point of time, he'll be able to understand the difference and he will accordingly make the adjustments. If such a payment is received by the bank, it will be entered in the customer's account and also in the passbook. The account holder may come to know of the amount only when he sees the passbook. Point number 8. Dishonor of a bill discounted by the bank. Dishonor of a bill discounted by the bank. If a bank is not able to receive payment on promissory note discounted by it, it will debit the customer's account together with the charges they may have incurred. The customer will naturally make the entry only when he sees the passbook. So what will happen over here in this transaction, that as per cash book, supposingly the customer is having balance 1 lakh. As per passbook, the customer will feel that the balance is 1 lakh, but there is a check which got dishonored, and there is a charges also which is applied. Supposingly the bank charges is 2000. So the banker will deduct 2000 from here, that is bank charges. The banker will deduct 2000 from here, and the banker has also not received the payment of that bill. Supposedly the bill is of 20,000, so the banker will also deduct 20,000. So as per the passbook, the balance will be 1 lakh minus 20,000 minus 2,000. That means 1 lakh minus 22,000. That would be 78,000. But as per customer, he will feel his balance is 1 lakh. So whenever there would be adjustment, they will tally the cash book with passbook, they will make the BRS, they will be able to understand that there is a difference and they will accordingly make the adjustments. See this example over here. The balance as per cash book and passbook of Mr. M are 20,000. Mr. X deposited a check of 3,000 and debited to his bank account as 3,000 immediately. But bank will credit X account on the realization of the amount. Now the check is dishonored for non-payment. Bank charges is 100 to this connection. Over here, there is the opening balance is 20,000. He deposited a check of 3,000, so the closing balance is 23,000 as per bank column of the cash book. Bank column of the cash book. Now as per the bank statement, the opening balance was 20,000, but what happens is 3,000 there is a bank charges, so minus the bank charges is 100 rupees, so 20,000 minus 100 rupees is 19,900, and even this 3,000 is not included over here because this check is not cleared only. Check is not cleared. So would not be added as per passbook oblique bank statement and bank charges bracket check dishonor of check. Bank charges because of dishonor of check is charged to the customer. Charged to the customer. I believe you understood. Just see it properly. Thus, balance of Mr. X account as per passbook is 19,900 after the transaction, while the balance in the cash book is 23,000. So Mr. X should deduct 3,000, the amount of dishonor check, plus 100 rupees, the amount of bank charges for reconciliation. Let's see the next point. Balance bills collected by the bank on behalf of the customer. Bills collected by the bank on behalf of the customer. If goods are sold, the documents may be sent through the bank. If the bank is able to collect the amount, it will credit it to customer's account directly. The customer may make the entry only when he receives the bank statement or the passbook. All these timing differences will lead to differences in the balances as shown in the cash book or in the passbook. I believe you understood this point. Following is the table summarizing the brief timing differences timing different transactions. Just see it over here. Transaction number 1, payment done by the account holder through issuing a check. Time of recording in cash book at the time of issuing of check. Time of recording in the passbook at the time presenting the check to the bank for payment or clearing the funds. So there may be a 3 to 4 days delay. It will take 3 to 4 days. So it may happen that if generally 3 to 4 days, it takes 3 to 4 days to clear the check because it went through the clearing house. But if the one who need to take the payment, he has not deposited, not presented the check to the banker, in that case there will be a delay. Point number 2, receipt by the account holder through a check. Time of recording in cash book at the time of depositing the check into the bank. At the time of depositing the check into the bank, what I am going to do, I will be add in the cash book. But at the time of collection of amount from the account of the issuing party, so over here it may happens that 2-3 days will take. Point number 3, collection of bills or collection of checks directly on behalf of the account holder. When the entry posted in the passbook comes into notice, when I'll be putting in the cash book, see collection of check, the banker has collected the check, I have no information. So when I'll get the information from the passbook, at that point of time we'll be making entry in the cash book. In the passbook, when the amount is collected by the bank, the entry will be made. Point number 4, direct payment to the third party on behalf of the account holder. In cash book, when the entry is posted in the passbook comes to notice, in the passbook when the amount paid by the bank. So the bank will make the payment to the third party and deduct the amount. But over here, when we'll do the reconciliation, at that point of time, we'll record in the cash book. When we'll see the passbook, at that point of time, we'll put the entry in the cash book. Point number 5, dishonor of checks or bills receivable. When the check is dishonored, the entry will be made in the passbook. When the entry posted in the passbook comes to notice, at that point of time we will be making entry in the cash book. Let's see point number 6, bank charges levied by the bank. As per the passbook, when charges are levied by the bank, the entry will be made in the passbook or in the bank statement. But when the entry posted into the passbook comes to notice, at that point of time, the entry will be made in the cash book. Point number 7, interest and dividend credited by the bank. The bank has directly credited or given the interest. At that point of time, when interest or dividend is allowed or collected by the bank, it is to be recorded in the passbook. But when the interest in the passbook comes to notice, it will be recorded in the cash book. I believe you understood. Let us continue. Point number 8, interest debited by the bank. So whenever the bank will debit the interest at that point of time, whenever the bank will charge the interest at that point of time, the entry is to be made in the passbook. But when the entry is posted to the bank passbook, comes to notice of the customer, at that point of time, he will make changes or he will make entry in the bank column of the cash book. I believe all of you are clear till here. Let us continue. Point number 10. When recording the entries, error can occur both in the cash book or in the passbook. A bank rarely make mistake or error, but if does, the balance as per passbook will naturally differ from the cash book. Similarly, if the error is committed on the cash book, then the balance will be different from that book in the passbook. Some of the errors include commission of entry, recording of an incorrect amount, recording of entry on the wrong side of the book, wrong totaling of the account, wrong balancing of book, recording of transactions of other parties by mistake. Just see this example. Example, Mr. A cash book shows the following transactions. This is bank column in the cash book. This is the opening balance. The opening balance over here, this is the closing balance. On March 31st, 2019, the closing balance is 1 lakh. 7 April, as you can see, on 1st April, the balance brought down is 10,000. The balance brought down is 10,000. Over here, it is 60,000 receipt, cash 80,000, and by cash account balance is by cash account 2,000 and closing balance is 128. Let's see the passbook now. Over here, the opening balance is 1 lakh. Students, you can see over here that they had taken this balance wrong. The balance was 1 lakh, but they had entered it 10,000. The opening balance they had entered 10,000. And secondly, this side is also wrong because opening balance come to debit side, but this person has recorded it on the credit side. When balance deposit 60,000, then by cash 80,000, Vandy 90,000. Over here there is no entry of Vandy, and cash 2,000. The entry is there. Just see the cash book and passbook entries properly. There are entries, there are errors over here. We need to rectify that. Let's move ahead. Here, there are several errors made by accountant. April 1, balance should have brought down on the debit side 1 lakh, but they had brought down on the credit side 10,000. April 13, also a check issued by Vandy has been omitted in the books of accounts. 90,000. Error of omission. So in correcting these entries, balance is per cash book will be existing balance is 1,80,000, 1,28,000. 1,28,000 is the existing balance. This closing balance, just see it over here. We need to rectify that. Add correct opening balance, that is 1 lakh. Add correct opening balance, that is 1 lakh. Add incorrect opening balance, that is 10,000. Since it was brought down on the credit side, it will be added back. Because there is a wrong entry on the credit side, so for rectification, we will add it back on the debit side. So it is for the adjustment and this is for the original entry. Less check issued but not recorded to Vandy 90,000 minus closing balance as per cash book is 1,48,000. Balance as per passbook is 3,28,000 less check to Vandy Limited wrongly added to existing balance, that is 1,48,000. So instead of adding it, this we have, so check to Vandy Limited wrongly added to existing balance instead of being subtracted. So 1,18,000 will be deducted over here. So 328 minus 1,80,000 is 1,48,000. So this rectification has been done. Now the difference between the cash book and the difference between the cash book and passbook is nil now. That means what? The difference is rectified. See the cash book once more. See the passbook. And then we have rectified by this statement. List of the causes of difference between the balance shown in the passbook and the cash book is listed over here. The difference may arise on account of the following, which will then figure in the BRS. We find it in the BRS. First, bank interest allowed by the bank. Interest allowed by the bank. Second, expenses charged by the bank. So bank will charge the expense as per passbook. There would be a minus. As per cash book, no entry would be there. In the first over here, interest allowed by the bank. So in the passbook there will be a plus. In the cash book there will be no entry. Third, interest and dividend collected by the bank. So in the passbook there will be plus because the interest the bank has collected. In the cash book there will be no entry. Later on it would be adjusted. Point number 4, direct payments by the bank. The banker has made direct payments, so in the passbook it would be deducted and in the cash book later on adjustments will be made. Fifth, direct payments into the bank or deposit by the customer. So in the passbook, direct deposit by the customer, so it would be added. In the cash book later on the adjustments need to be made. Sixth point, dishonor of bill discounted by the bank and dishonor of check deposited. So dishonor of bill, maybe the discounting charge is also charged, so it would be deducted by the bank and later on the adjustment needs to be made in the cash book. Bills collected by the bank on behalf of the customer. So in the passbook it would be added and later on adjustment is to be made in the cash book. Check issued but not yet presented for payment. Check issued, that means in the cash book it would be deducted and later on the adjustment is made in the passbook. Check paid into bank account but not yet cleared. Check paid into bank account but not yet cleared. That means what? That in the cash book we will add and later on adjustment is made in the passbook. An error committed by the bank. The bank has committed an error. So in the passbook either there would be a plus or minus. Later on we will make adjustments in the cash book. And at last, an error committed by the bank. Over here, the error committed by the customer. So this relates to over here, and by the customer. So in the customer's book, cash book, either there would be a plus or minus, and later the entry will be made in the passbook. The adjustment will be made later in the passbook. Let us continue. Let's see this question number 1. On 31st March 2014, the bank balance as per Rajesh Chauhan cash book was rupees 17,280. This is the balance as per cash book, debit balance. On comparing the cash book with the passbook, the following differences were found. First, check for 8,400 sent for collection have not been cleared by the bank. That means what? A check we had sent for collection, that means we had added it to the cash book, but the banker has not yet cleared right now, so the entry would not be reflecting in the bank. This is first. Second, check issued but not yet presented for payment 5,600. We had issued the check, that means what? In the cash book we have deducted it, there is a minus, but not yet presented for payment, so entry is not reflecting in the passbook. Later on it will reflect. Point number 3, there is a debit of 80 in the passbook. That means there is a minus of 80 in the passbook for bank charges, but in the cash book it is not reflecting right now. Later on it will reflect. Fourth, bank has credited 240 for interest. Bank has credited 240 for interest in the passbook. That means it is added in the passbook, but these are also not recorded in the cash book. That means what? That in the cash book this 240 is not reflecting. Later on it will reflect. Point number 5, a customer deposited 2,000 rupees directly in the bank, but these were recorded only in the passbook. There is no entry in the cash book till yet. So in the passbook it would be plus, but later on the entry will reflect in the cash book. Point number 6, according to the standing order of Rajesh Chauhan, the bank has made the following payments by debiting his account. First, club fees 500. So the banker has deducted Rajesh Chauhan club fees 500 and life insurance premium 2,500. The bank has debited. That means the bank had done minus in the passbook balance of Mr. Rajesh Chauhan. These were not recorded in the cash book. That means what? In the cash book the entry is not reflecting right now. Later on, at a later point of time, this entry will also reflect in the cash book when Mr. Rajesh Chauhan will take into consideration that yes, the entry is reflecting in the passbook. Later on he will adjust the cash book. Over here in this question, prepare a BRS bank reconciliation statement as on 31st of March 2014. This has been demanded by the question. Now see whether we have given the balance as per passbook or we have given the balance as per cash book. So on 30th March 2014, the bank balance of Mr. Rajesh Chauhan cash book was given over here 17,280. I had given you a logic over here in this chapter. Do what other has done. So over here it is not right or wrong. We just want to reconcile. We just want to tally and try to understand that what is the logical differences, what is the reasons of logical differences between the cash book and a passbook. And that is why what we are doing is over here we will try to match this cash book balance with the passbook balance. So let's try to solve this question. Just write over here, just make a statement, bank reconciliation statement. Bank reconciliation statement of Mr. Rajesh Chauhan. What is the date? 31st March 2014. Dated 31st March 2014. Particulars. Just write amount over here. Let's begin. Balance as per cash book. So as per cash book, the positive balance is known as debit. So debit balance as per cash book. What is the balance? 17,280. Write in the final column 17,280. We'll be solving this by add and less method. So just write add, leave some lines, just write less over here and leave some lines. Now try to read the question. The first point, check for 8,400 sent for collection have not been cleared by the bank. That means what? That we have sent this check for collection. So we have added in the cash book, but there is no entry in the bank. The bank has not made any entry in the cash book. So we also need to remove this entry from the cash book. We have already added it. For removal of this entry from the cash book, we need to deduct it. So over here we will write in less column, check deposited but not cleared, 8,400. What we have done is we had already added this in the cash book. So we have removed this from the cash book to make it neutral or in compliance with the passbook. First is done. Second, check issued but not yet presented for payment, 5,600. We have issued the check. That means we have deducted it from the cash book. Now we need to add it back to the cash book so that the cash book should be in alignment with the passbook. 5,600. Just write over here, check issued but not yet paid, 5,600. Let's see the third point. There is a debit of $80, the debit of $80 by the passbook. So in the passbook it is deducted. But there is not recorded in the cash book. So we need to make changes in the cash book. In the passbook it is deducted, so we also need to deduct in the cash book. It would be deducted. The 80 would be deducted. Just write over here bank charges 80. Point number 3 is done. Fourth, bank has credited 240 as interest. So bank has added, we also need to add in the cash book 240 as bank interest. Just write over here bank interest credited, bank interest given or bank interest credited 240. I believe it is clear. Point number 4 is also done. Let's see point number 5. A customer has deposited 2000 directly into the bank account. That means 2000 would be added in the passbook. In the cash book, we have no information. So we will record in the cash book also and we will add in the cash book 2000. Right over here, direct deposit by customer, direct deposit by customer 2000. Point number 5 is also done. Sixth one, according to the standing order of Mr. Rajesh Chauhan, a payment is made, club fees. So in the passbook, it is deducted. We also need to deduct this 500 in the cash book. In cash book also we need to deduct. And life insurance premium 2500. In the passbook it is deducted. We also need to deduct in the cash book. So just write over here, club fees 500 and also write life insurance premium 2500. So these things we need to deduct and these three items we need to add. Just add these three items. 5600 plus 240 plus 2000. 5600 plus 2000 is 7600 plus 200, 7800 plus 40, 7840. Over here, just deduct these. Just first of all, just add all this and then we'll deduct in the final column. 8400 plus 80 plus 500 plus 2500. The total is 11480. This would be deducted. So 17,280 plus 7,840 plus 11,480. The final figure is 13,640. This is balance as per passbook. Balance as per passbook. This we had calculated. Balance as per cash book 17,280. We had make adjustment and we reached to balance as per passbook. I believe you understood till here. Okay. Just record a small thing somewhere in your notebook. Cash book. The positive balance in the cash book is known as debit balance and the negative balance in the cash book is known as credit balance. Prepared by the customer cash book. Which column? Bank column. Bank column of the cash book. Positive balance, that means debit balance, and negative balance means credit balance. On the same lines over here, passbook or bank statement prepared by the bank positive balance is credit balance and negative balance is debit balance. This will help you in solving the questions. Kindly record it in your notebook properly. The logic is why we are debiting the positive bank balance, because customer thinks that banker is the debtor. Customer thinks Customer thinks that banker is a debtor. So, or you can say that trade receivable. This treatment is given by the customer to the bank. And what bank will give the treatment to the customer? The banker will think that customer is a creditor. So this amounts that he has in his bank account needs to be paid back someday. So he will treat it as trade payable. Trade payable. I believe you understood. Let's see a quick recap what we had done today and then we'll wind up for the class. We have seen the remaining items, that is interest allowed by the bank, the transactions, interest and expenses charged by the bank, and all the transactions we had seen in today's class. The reasons for differences between the passbook and the cash book. And then after that, we had solved a question, that is question number 1. And over here, we wind up today's class. Thank you. Thank you all.